Good morning, afternoon, and evening to everyone joining us. Thank you so much for being here today. And while we wait for others to join, please feel free to say hello and introduce yourself in the chat box. My name is Emma Wink. I'm a project lead at BASE, and I will be moderating today's session. This webinar is the second installment of our three-part series dedicated to unlocking cold storage financing in agriculture with a focus on cold rooms as a service. As many of you will be aware, scaling access to cold storage for agriculture is an important area of focus, with millions of farmers in developing countries still lacking or having insufficient access to cold storage. This results in lower agricultural incomes, affects food security, and results in significant food loss. Cooling is a climate, health, food security, and social justice issue where women are also often the most adversely impacted. To tackle these issues, an increasing number of entrepreneurs around the world are establishing decentralized cold rooms, often integrating solar PV, and these are operated using a pay-per-use model. These businesses are extending the shelf life of produce and tapping into market opportunities. However, there is a big challenge. These companies often require additional financing to support and expand their operations and impact. We hope to shed light on some of the strategies and tools to enable scalability, to try and understand how to better match company, donor, and investment expectations, and to explore the different pathways to accessing finance. I would encourage you, if you haven't already, to check out last week's session, which is available to watch on the BASE YouTube channel, and we've also curated key takeaways that are available on the Set Alliance website. The first session provided a comprehensive overview of the financing landscape for cold rooms, where you can understand the multidimensional impacts, barriers, business models, instruments, and tools that are all relevant for scaling agricultural cold storage. Speakers and presentations were from SE for All, Wageningen University, and Climate Policy Initiative. Now, today we're going to hear some different perspectives across finance and practice, and we'll go deeper into the challenges and solutions when it comes to accessing and scaling finance for cold rooms as a service. We're going to be asking questions like, what are some of the challenges faced by cooling companies? What really matters to investors and what criteria are they interested in? And as a running thread, how can some of these challenges be addressed by digital tools? So we have a bit of a jam-packed agenda today with 5 awesome organizations joining us: Get Invest, AcoFresh, SocoFresh, InfoCredit, and BASE. And joining us on our panel of speakers, we have Divya Balakrishnan, Senior Advisor, and Zach Bloomfield, Finance Catalyst Advisor at Get Invest, which is a European program mobilizing investments in renewable energy in developing countries. We also have Matthias Charles Yeg, CEO of AcoFresh and running Cooling as a Service in Ghana. We have Paul van der Linden, co-founder and acting CFO of SocoFresh, which delivers cooling as a service in Kenya. And we have Chinua Azubike, CEO, and Uzoma Okoro, Assistant VP of InfoCredit, which is a specialized financial guarantor based in Nigeria. Then finally, we have Roberta Evangelista, Senior Digitalization Specialist at BASE and Project Lead of your Virtual Cold Chain Assistant. I invite participants to put their questions in the comment box. Our panelists and team will try and answer any questions as we go along, and we'll collect these afterwards and address them in the Q&A session at the end, or keep them for the final session next week, where we invite all panelists and cooling companies from both sessions to engage with each other. So now over to our first speakers, Divya and Zach, who will explain the role of Get Invest as an advisory for access to finance, their perspective on scaling finance for cold rooms as a service, and present some examples of organizations and projects in this space that they have helped to support.
Hello, everybody, and thank you for joining us today. I am Divya Balakrishnan, and I am a senior advisor at Get Invest based in Frankfurt, Germany. Now, probably everyone on this call knows about the relevant SDG and Paris climate goals that we as a sector are working towards, or one might even say working against, looking at how ambitious these goals are, and that time is ticking, right? Now, key sector players, namely the private sector, companies / developers and financiers, are diligently working within their own bubbles of work and control. meaning on the one hand, you have the private sector doing their best at enabling energy access, even at the absolute grassroots level. And then on the other hand, you have financiers who are keen on financing, but as per their norms and procedures, which to a private sector company can be very overwhelming. So the private sector finds it difficult to access capital that matches their needs, and then they end up dealing with processes that take too long. And then financiers struggle with non-bankable projects and companies who are maybe not ready for financing, who maybe don't speak the investment language that financiers want to hear, and etc. So now this disconnect between the ones who can deliver and the ones who can empower that delivery is why Get Invest exists. Moving on to the next slide. Get Invest is a European program that mobilizes investments in decentralized renewable energy. Now, the program is implemented by the GIZ and is supported by European Union, Germany, Sweden, the Netherlands, and Austria. We work in the regions of sub-Saharan Africa and the Pacific, as well as the Caribbean regions, but sub-Saharan Africa is indeed the region that we most focus our work on. We are also the one-stop shop for green energy investments in Africa as part of the Team Europe Africa EU Green Energy Initiative. And at the heart of our work is our advisory support, where we help clean energy companies and project developers, maybe like you, become bankable and find financing by linking them to the right financiers. So we do not finance projects or companies by ourselves, but we help link you to the right financiers. Now, we are size and technology agnostic, meaning we serve solar home system clients at the point of their scale up, but we also work with huge hydropower utility size developers, right? And now the good news is that our services are entirely free for the clients. Alongside, we support partners such as GOGLA, ARE, Alliance for Rural Electrification, and GDC, for instance, to organize webinars or conferences, to conduct targeted capacity building, such as investment academies, right? And then Get Invest also creates market information, such as an extensive funding database on our website or country and sector-based market research. In fact, we are currently publishing a package, or we have just published a package on Uganda this week, which also includes very interesting techno-economic insights on cooling as a service, which you might find very relevant. So please do check out the announcements from Get Invest on this. Now, to give you an idea of the scale of our work, if you already haven't heard of Get Invest or worked with us in the past, I'd like to highlight that we have supported close to 400 clients in the last 7 years, approximately, of which 76 clients have signed financing agreements to a tune of 356 million euros, right? And in fact, we are currently supporting 185 clients in parallel. And this is done through 9 different consulting firms. Now, what you also see there on the slide is the 1.8 billion euro of investment. This number represents the conversations that are ongoing for clients who have not yet received financing or who have not yet signed financing agreements. With this, I'd like to invite you, if you are a company or a project developer of any size or of any technology relevant to renewable energies, we could support you. So please do get in touch with me or my colleague Zach here, or directly apply online on the Get Invest website. With this, I'd like to hand over to Zachary Bloomfield, who is one of the many advisors who might, in fact, even end up working with you if you apply to us. Over to you now, Zach. Please take it away.
Thanks, Divya. So to dive in a little bit on specifically in cooling as a service, the subject of this webinar, We have quite a bit of experience interacting with clients across the renewable energy spectrum, including cooling as a service that's powered by renewable sources. And we'd like to share some of our observations about what is really critical in the pursuit of finance. And I mean, the first point is that data is totally critical. With cooling as a service and any business that's really as a service, any AAS business, the ability to capture and use data on utilization, revenue, reliability, power factors, things like that is really critical to not just showing the successful operations of a business, but also in conveying that success to a third party like an investor or a financier. This is critical when you're talking to an equity partner. It's critical when you're talking to a lender. It's usually critical and probably an essential part of also accessing results-based finance. So building out a strong and robust data set that can be trusted and a data system that can be trusted is absolutely critical. And when we as GetInvest are looking at new clients, part of, especially in the cooling as a service niche, part of the decision that we make about whether that client goes to a finance catalyst or the finance readiness service, which are two different services that we provide, is based on the state of preparation of their data system. Generally, I mean, this speaks more to the financiers and the donors that are involved in cooling as a sector, maybe than the companies. But for some things that we've observed that are critical financial and non-financial support aspects to cooling. On the non-financial side, there's obviously a need for regulatory advocacy and certification support. Those are maybe two different things, but grouped together, it kind of falls under the remit of technical assistance, either to governments and regulators, or to kind of business associations and even private or individual companies to achieve the certifications that are necessary to use cooling as a service for a broader remit of clients. There's always a need for new companies and for startups and novel concepts to refine business models, better clarify revenue sources, better understand and document costs, ongoing costs and capital expenditures, and integrate all of that into a financial model. One of the things that we do at the Finance Catalyst is build financial models for our clients, and those are quite robust and of the quality that even IFC might be impressed. And then because cooling as a service is a key part of value chains and supply chains, enhancing the robustness of those value chains that are targets for clients and also users and sort of downstream beneficiaries of cooling as a service need to be supported, need to be developed. Some of our ideas in terms of financial support that might be very, very impactful in this sector specifically, or this niche specifically. Minimum revenue guarantees is a topic that's often discussed in the context of mini grids, but it also applies in cooling as a service as basically a short-term bolster to revenue to ensure that some baseline revenue is achieved by a cooling company, in order to make sure or to comfort lenders that they can meet their short-term and long-term debt obligations, but at least meet them in the near term as the business is scaling and growing and sort of developing. There's also a lot of opportunity for microcredit and microfinance, and capitalization for microcredit schemes is really critical, especially for appliance-based cooling as a service, but also for cold rooms. Long-term leasing is another aspect, and building out tailored finance for cooling and the business model of cooling, because often financiers in with a product that's been developed for unrelated project finance kind of approach or a general corporate finance approach for an established corporate entity. Most cooling as a service companies are arguably startups, and so the products that they're being offered are not necessarily totally appropriate. There's opportunity for securitization, especially when we have a fleet of appliances that are operating on a pay-go basis. And there's a huge opportunity, maybe a bit untapped, that for carbon pre-financing. Also, as noted in the non-financial support, I mean, it is a kind of a form of financial support. Getting carbon certified and doing baseline research and all of those things are critical parts of the carbon finance access process, and requires quite a bit of money on the part of those companies. And then, I mean, when we are advising our cooling as a service companies some things that we like to really clarify and zoom in on and help them to document and to present is revenue model and certainty. There's a lot of different kinds of customers that you can target, different niches and different, whether we're working food service or pharmaceuticals or just general cooling for shops and things like that. But understanding, segmenting, and documenting customer and estimating total market that's accessible. A key thing that we deal with a lot is the durability and enforceability of underlying contracts, if they exist at all. Jurisdictions come into play here, and sort of national laws or subnational laws. But the sort of strength of those contracts is a key part of how financiers will look at a business model and say, well, yeah, that's a good idea, or no, good thinking, but probably not financeable. It's becoming a more competitive space, so that's something we also look at. And then the track towards scalability and growth, how that will be achieved, how new sites will be identified, how new markets will be opened, which countries we're talking about, and proximity and distribution of use sites. Another key part that may come up is the secondary market for cold rooms and also cooling appliances. And then the cost of finance and looking at the overall financing package, cost of equity versus the cost of debt, what kind of grants are involved, and building out a package of with a weighted average cost of capital that is feasible from a commercial perspective for the company. So we have a couple of our example clients. This is Inspira Farms, which builds primarily farm adjacent cold rooms. There's a lot of information here. This presentation will be distributed, and I welcome any questions about these, but I wanted to include them. Coolbox is not necessarily a cold room company, but they are building Pago freezers and other kinds of chillers, and are well on their way to a pretty impressive growth trajectory right now. And then on the sort of smaller localized, the Coolbox and Inspira are finance catalyst clients, which means they're generally relatively larger and better developed startups, sort of further along in the process of raising capital. We also, our financial readiness support service really works with at concept stage and later companies that are building business models, raising their first bit of equity and things like that. And so Baridi and Ikotutu are two of those companies, and they're looking for relatively smaller amounts of money, but are playing critical roles in cooling in value chains in their specific areas. And as Divya mentioned, we accept applications on a rolling basis. If you have any questions about the application, please feel free to reach out to Divya or myself. There's also a general email on our website, but here you can find more information. At this link on the other tabs, you can also find the sort of market information and market research that we've undertaken. And yeah, please do reach out. And as noted, this presentation will be distributed to all the participants. So thank you.
Thank you, Divya and Zach, for a very insightful presentation, and great to see how much impact you've had on the market. And just to reiterate, we will be making these slides available so that you can catch up on all of the content after the session. Just potentially a quick question before we move on to our next speaker. You briefly touched on, Zach, the lack of secondary market for cold rooms. What are some of the things you think that could be done to address this, or how do you see this challenge?
Yeah, I mean, it depends a lot. If we're talking about a cold room, it's very different than if we're talking about a cooling appliance. In the context of cold rooms, the unfortunate truth or the nature of the market is that these cold rooms are generally very bespoke and very customized to the needs of the client. Generally, at least what we've seen is they can be kind of on the smaller side, specific to the needs of an individual client or perhaps two clients that are neighboring, like, or geographically proximate to one another. In order to get to a secondary market where there's demand for those cold rooms, I mean, the first thing is that they need to be mobile, because cooling is such a temporal and proximate consideration. They need to be containerized, they need to be mobile and relatively easy to move from site to site. And as we can approach a kind of standardized or modular design, and especially with certifications that sort of span a couple of different niches, phytosanitary, pharmaceutical, and whatever else, that will help to enable a secondary market where, you know, a farm could use a cold room that was used for another purpose, but it still meets the requirements for export quality and also local use quality. So, I mean, those are some thoughts on that. Probably not super insightful, but the secondary market will help to open up some financing opportunities, because a key part of a financier's decision is the collateralization of those assets that are being financed. And in order to collateralize an asset, it has to be worth something. And right now, financiers are looking at most of these cold rooms and saying, well, yeah, you put a lot of money into it, but it's not worth a lot of money if we try to sell it to somebody else. So the more we can demonstrate and build out that secondary market, the more accessible and arguably the cheaper, at least the risk premiums, will be on the financing that's provided to these companies.
Thank you, Zach. So it sounds like, just to reiterate, that modularity and mobility are important considerations when we're talking about cold rooms for CAS and trying to encourage a secondary market. I'm gonna move on to our second speaker, Matthias from EcoFresh. I believe he's joining us from Ghana today. Matthias, if you'd like to share your screen and tell us all about EcoFresh. Thank you.
Hi, am I audible? Hello, everyone. I am thrilled today to be here presenting EcoFresh, which is an innovative organization that is dedicated to revolutionizing the cold storage solutions for agriculture. So our mission at EcoFresh is quite simple. We are on a mission to combat the issue of post-harvest losses and enhance food security in vulnerable communities. So today I'm going to share about our operational model, our financial journey, and our plans for scaling, in addition to some of the impacts we've made so far. So how did we start EcoFresh? So basically, it all started back in 2018 when I went on a volunteer trip. During this volunteer trip, I met a 56-year-old woman. She took me around her farm, pointing out rotten tomatoes and sadly sharing how hard she had worked, only to lose about a third of all her crops. Her story really inspired me and my friends because I grew up in a small farming village in the eastern part of Ghana, so I had seen firsthand some of the challenges farmers go through. But that day, upon seeing that most of the crops are being thrown away, just like you're seeing in the video, was something that was quite heartbreaking, and that was what inspired me and my team to start EcoFresh to help strengthen food systems in local communities in Ghana. So I'm sure you're not new to this problem, but I still want to reiterate, because as at now, there's a third of all food produced which is lost or wasted every year around the globe. And it's not really good because it affects the environment, causing greenhouse gas emissions. And just in Ghana, we have farmers losing up to 50% of all their harvest before getting to consumers. And even in Africa as a whole, in sub-Saharan Africa, we have farmers losing 40% of all their crops as well. So how are we operating? So at EcoFresh, we operate under a cooling as a service, where we make use of the pay-as-you-go module. And with this module, we ensure that smallholder farmers can really benefit from the solution. So the farmers don't really need to purchase the entire technology upfront. Neither do they need to have the technical expertise. All they have to do is to rent out storage spaces and then pay a daily fee of 30 cents for each 20 kg crates stored a day. So this is how we are offering our solution to farmers. So currently we have a user rate of 90% across about the 250 farmers we are currently serving. And then this really demonstrates that the solution is something that is really effective and it is accepted in the community we piloted in. We've also been able to make use of digital tools. So digital tools, we believe, is something that can really help us with managing our systems and then also providing investors with real-time data on our operations. So we make use of IoT in terms of getting real-time data on how our technology is being operated. And then we also have an integrated store, which is currently embedded on our website. So the online store is supposed to help give food aggregators an idea of what kind of crops are currently being stored in our cold storage units. And then we are able to also connect farmers to market. So since our inception, our financing strategy has evolved. We started with seed funding, which was an equity-free seed funding from Fishbowl. And then this really fueled us with regards to our initial operations and our pilot project. And this was really a game changer for us to really demonstrate how the solution is going to work within the fruit and vegetable value chain in our pilot community in Ghana. So we had the opportunity to pilot in one of Ghana's major tomato farming communities, which is Akumadan, where farmers are losing nearly $1 million worth of fresh produce within that municipality. So we are currently piloting there, and we are the only cold storage solution present in that area. Beyond that, we've also had the chance to receive quite a number of awards and donations, helping us to be able to scale what we have within our pilot community and then improve on our product development as well. So we've had quite few support from the institutions listed here, just a few like Total Energies, Global Solutions, among others. We are also currently having conversations, so I can't really disclose much info on that. We are having conversations around carbon credits. Hopefully, we should be able to start receiving carbon credits next year with a couple of organizations we are hoping to work on some projects with. So we are also considering debt and equity investments. We've had a couple of organizations reaching out to us for debt financing opportunities for us to set up our products for other farmers and other cooperatives in different geographies within Ghana as well. So this is a little bit of how our financing is evolving because we are very early stage. We are still under 3 years since we started operation. So we are really looking forward to getting some of these opportunities like the carbon credit and the debt, as well as equity investments, beyond what we had already secured, like the equity free funding and the grants we've gotten so far. So just from our humble beginnings, this is what we've been able to do so far. We are currently having 250 farmers actively using our service, and so far our solution has impacted over 1,800 individuals. Since we started operating our first product in our pilot community, we've avoided over 300 tons of food waste emissions, created 5 jobs for women, and we've also been able to work with about 10 partners working on different projects within the fruit and vegetable value chain, helping smallholder farmers in different farming communities. And it's quite interesting to know that the farmers who use our service within 2 farming seasons were able to increase their income by 150% because they were able to gain the bargaining power in the case where farmers are now able to accept good pricing for their yield because they don't really have to wait for buyers to come to their end to offer low prices. They now have cold storage, which means that they are able to store crops and have enough time to sell them at competitive prices. And we've also had the chance to be invited to speak at some global food policy discussions as well. Now, the last slide I have here in terms of our scaling plans and financing challenges. So as of now, we are currently looking forward to scaling beyond our first pilot community. So we are currently looking at expanding to more communities in Ghana. So between 2024 to 2026, we should have 5 new cold rooms in market centers. So we are trying to pivot into market clusters as well. As we are speaking, we've completed a due diligence with one funder, and we are looking forward to getting the funding support to set up a new cold room in a marketplace in Ghana, hopefully before mid next year. And we are also currently part of a consortium, pending final conclusions. We should be able to conduct a pilot in Uganda as well, as part of our role as technology partner in the consortium. So within the period of 2024 to 2026, we should be able to reach up to 5,000 farmers and traders with our initial plan of scaling in Ghana and Uganda. In terms of, so with regards to our financing for the scale, we are currently considering grants. We are also considering debt financing as well. So these are the two financing opportunities that are currently available. And one more financing opportunity we are currently having has to do with the carbon credits opportunity I spoke about, where there's a financier who is willing to give us carbon credits. However, the challenge with that one is that we have to finance the initial investment. We need to provide the initial investment to set up all these cold rooms to meet the mitigation required before we will be able to benefit from the carbon credits. So that is the challenge we are facing now, because it involves a lot of money, and until we're able to raise that money and implement all these cold rooms to meet the mitigation requirements, we wouldn't be able to get the carbon credit. So these are the some of the conversations we are having with quite a number of institutions in terms of helping us to scale beyond our initial pilot community. In terms of our financing challenges so far, some of the three challenges on top of my head is unfavorable due diligence criteria. So sometimes we get some of the criteria, the due diligence criteria, which are not really unfavorable, in the sense that some of us are very early stage. So sometimes you get criteria coming in that you need to be operating for the past 7 years, and which doesn't really help those of us who are proven products and still are under 3 years. And so that is one of them. We are also looking at some of the cautious nature of investments in emerging markets. That has also been some of the concerns, because and then few investment opportunities for cooling as a service solution. So although the cold chain industry is very huge, the cold chain market is like it's worth billions of dollars. However, there are few opportunities for those of us working in that space, offering a solution as a service. It's quite difficult to attract investment opportunities. So these are some of the financing challenges we've seen so far. However, what we've been able to do to overcome these challenges is presenting the results we've been able to make so far, leveraging some of our partners and institutions, credible institutions that have supported us to put in recommendation, on our behalf, and then also recommend us to other institutions who are likely to fund us. And then also collaborating with other institutions to make sure that we put in, stronger proposals, because sometimes just working alone doesn't really help. So that's why I initially mentioned that we are currently also considering joining some consortiums where we'll be able to jointly, reach out to investors and other development agency and development partners for funding. So basically, that is what I have so far here. And then for me, I believe that AquaFresh journey is something that is quite transformative with the little, that we've been able to do so far here in Ghana. And we believe that our robust operational model, our innovative financing strategies, and the power of digital tools is something that will really help us make greater impact. And we are really looking forward to receiving your support. The investors here, we are open to support and advisory as well. And we are very confident that together we will be able to reshape the future of agriculture, one cold storage solution at a time. Thank you so much.
Thank you, Matthias, for providing more insights on AquaFresh, your plans for the future. I have a question that's also, you have a lot of questions in the chat, by the way, to address. I think a lot of interest on how you work. The question that I have is, you mentioned there that you want to do a pilot in Uganda. What are your reasons for choosing this location?
Right. Thank you so much. So we as a company didn't actually choose the Uganda to be our next pilot. For us as a company, we are currently focusing on, scaling it within Ghana, because still the Ghanaian cold chain space for cooling as a service is still untapped. However, we chose Uganda because we are working in a consortium, and that was what the consortium agreed on for that the funding we are receiving from from the Horizon Europe project. So we also felt it's something that is quite reasonable because it's an opportunity for us to test our business model and our products within that market as well. So we are not really focusing on doing a large scale in Uganda. What we are doing now is focusing on scaling in Ghana. However, being part of the consortium requires that we also get to test the business model and the product validity in the Ugandan market as well.
Okay, great. Thanks for clarifying, and that it's tied to kind of the wants and needs of the financiers. Thank you. Okay, so now over to our next speaker, Paul from Soccerfresh, who's going to take us through their operations in Kenya, how their financing has evolved as well, and their plans to scale. Thank you, Paul.
Yes, thank you very much, Emma. And good afternoon, everybody. I'm Paul, I'm CEO at MView, a social venture building studio, and CFO at, interim CFO, I would say, at Soccerfresh, the company that we ideated through MView. So let me spend 1 minute on MView, so you know sort of the origin. We're a foundation that's a venture building studio, so we basically take an entrepreneurial approach towards solving some of the largest issues worldwide. We're currently active in 4 domains across 4 strategic locations. And specifically in East Africa, we've been focusing on sustainable food systems. So first on food loss and currently on regenerative agriculture. And the way we work is issue driven. So we first make an analysis of a failing system. In this case, it was food loss in East Africa, post-harvest food loss issue. And from there, we ideate new solutions. We also really look for complementarity in the market. So we work together with lots of partners that are already in that market. And we set up companies looking for product market fit. And in the end, with an entrepreneurial team, really create direct impact. Creating the direct impact, but also inspiring others to follow suit. So I hope this webinar does something in that regards as well. So that we can really work towards an inclusive and working sustainable system. Soccerfresh has quite some interventions in one. At the core, it's cold storage as a service where we started from. So we saw the lack of cold storage. We also saw the lack of all the informal players in this market not being able to invest in the proper infrastructure to reduce food loss. And this is combined with the lack of financing. It's combined also with lack of proper transport solutions and with produce changing hand to hand many times. I think the issues have been discussed, so I'll jump to our solution. So Soccerfresh offers a full service model. Basically, I think our clients would not say, our customers, the smaller farmers and the produce buyers would not say we're a cold storage company, but a trading company. And what we do is we aggregate demand from large buyers that are exporters, processors, urban distributors. And with that demand, we go to our network of smaller farmers, aggregate the produce with them, and then we pull it through the proper infrastructure. So there we benefit from having cold storage and having our hubs. And basically, through that whole system, we create a cash flow positive experience for the smaller farmer. So they don't have to invest anything actually, but they benefit from all the benefits that come with cold storage, which is higher quality, less food loss, reduced transport cost, and we earn our fee in the transaction between the buyer and the farmer. So for both, it was a very limited adaptation to their way of working, and the upside is captured in the proper implementation of this infrastructure. And that's also where I think the key is of the scalability of this model. Besides that, we offer cold storage leasing. Basically came from a request also from our clients on the buying side that also have their own outgrower scheme for less seasonal crops, and we're interested in a leasing proposition. So we've rolled this out, which is also interesting for the more formalized parts, I would say, of these value chains. Until now, we're serving now over 12,000 farmers, had a few impact assessments, and on average, we see that we help the farmer increase their income with 20%. Within our trades, we're able to reduce food loss to a minimum, 0 to 2% per trade, and scaling is going quite fast. So I'll take you a little bit through our journey, Scoot toward the financing because of this webinar, because I think there's much more to tell about this journey, of course. But we started in 2019 with MVU doing a feasibility study on cold storage as a service. Then with those findings and zooming in on the value chains of avocado and mangoes, we were able to set up a pilot together with Prio and the Rabobank Foundation. With those two cold storages, we were really able to develop the unit economics, the business case, the service around it, how to propose it to the farmers. Made lots of mistakes, learned a lot, and through that could build a case which we were able to expand actually our pilot, this time with the support of EEP Africa. So you see a lot of our funding already at the time came more from the productive energy use space. Also Rabobank stepped up and initially gave a grant and now gave a repayable grant through which we were able to finance the first or the second batch of cold storages. 2021, I think, was really the year of full operations. Very proud to achieve the 75K revenue. And with that and the proven model, we were also able to raise the funds, the first equity from Safaricom and from Acumen last year. And besides that, in our whole journey, of course, we always knew that we were going for an asset heavy and with that a capex heavy model. So we've always been looking at what are the financing options for us to make this scalable. SPV structure was always one top of mind. How can we separate the risk of a startup with the risk on the assets? So we are setting up an SPV now in the very final stages. Took almost a year, I would say, to get there. So, but we learned a lot on that as well, which we can buy the next batch of cold storages and really grow our asset base. Some learnings in this journey. I would not yet call it challenges because I think we've always been proactive enough and lucky enough maybe that we were looking forward, because in the end we never had real trouble, but it did always take us 6 to 12 months to close any deal, be it a grant or equity. So it takes a lot of time. You have to really look forward. You're doing something quite new, so also the due diligence takes quite some time. We talked to many financiers, and what we really saw is actually that we were on grants much longer than we thought. I'm really grateful for that. But we were open to progress earlier because our model works. But what we saw with local banks is that the tenure was too short. So our model works if you have a 5 to 7 year tenure, and not with a 2 to 3 year. And with the international funds, we saw that we were looking in the beginning for $1 million in debt or equity, and the ticket size started 5 to 10 million. So we were much too early for that. What you see in our journey as well is that we actually jumped from grants to Safaricom, for example. So it's interesting that actually on the commercial side, there was a lot of traction, and they could move faster. It was really more from the strategic side, seeing smallholder farmers as an important group to build on, or from the cold chain side. yes, think about that conclusion. But also very happy with Rabobank and Acumen, who of course did come in also really from the impact side. Yeah, I think indeed mentioned also earlier, but gold storages are not great securities. I think indeed there's an unclear secondary market, so we were not able to finance through debts with our existing gold storages as collateral. So that's yeah, I think quite an important finding. And of course, I think everyone knows there's plenty of money. We were able to talk to interested financiers every week for the past 4 years. But I do think there's very few that want to go early. So I think this was shared with by EcoFresh as an experience. Of course, from the startup perspective, I would rather have financiers place many small bets and then grow with the good ones than that they place one big bet on the more developed startups. But we didn't experience it yet. And I think it's also quite interesting that it's really scattered. So for every part, we have to look for a different kind of financier, either on the assets or on the working capital, or more VC funds, and in different stages also towards different parties. Well, I think it's also, yeah, I think it was really proven as a valuable partnership with Rabobank, where they could really grow with us as a general financier for the business throughout the different stages. So hoping for more investors looking at it that way, having different instruments for the different stages. A question posed by Base was also on the digital tools, and if they've enabled our financing. I would assume so. I do think indeed for these kind of businesses, you always need full visibility on the performance of your assets. Remote management is super important. And also for the working with smaller farmers, working with many small transactions and many small suppliers requires an optimum system. So we've built it in from the start. And in general, running such a low margin, high volume business needs continuous financial oversight. But then it definitely helps, of course, that with the push of a button, you can also share it with your investors and show that you have full visibility on all the elements in your business. Let me share a little bit about the future. So actually this year, I mentioned 2021, 75K turnover. This year, we're already over 1 million, so aiming for 1.2. We're serving more than 12,000 farmers, built a digital platform, and yeah, now we're also really looking to grow it based on this proven model. So we just opened up a new financing round. I will have more lessons to share in a few months, probably. And now looking for 7 million in debt and equity to really make sure we can take the next step towards the growth. I see a huge opportunity in this market, and I think it's great that there are more companies actually with us that try to get us off the ground. Happy to answer any questions that might be there.
Thank you, Paul. So what I take from your presentation is we want some financiers to place some big bets, and that things are going really, really well. And I just wanted to ask a quick question. On one of the slides, you mentioned, or it talks about kind of leasing. And I wondered if this was a stepping stone to our service business model, or was it like a transition phase?
No, it was actually the other way around. So actually we started with the full service, but then saw the request for leasing as well. And the way I look at it is that leasing is indeed quite straightforward and easy to implement model for a part of this industry. And so for the more formalized companies that have year-round need for cold storage, it works. But the reality is that 90% of produce is produced by the smallholder farmers. There's a lot of seasonal crop storages and to optimize. So with optimal utilization rates, you need a company that actually orchestrates all of that. So I would see leasing, there's a large market for that as well, but the full service could work anywhere throughout Sub-Saharan Africa. So I think their scalability in the end would be there.
Okay, so it's also to do with the issue of seasonality.
For sure.
Okay, great. Now I just want to hand over to our next speaker. We're going to go to more of a financing perspective. Ozuma or Chinua, are you able to share your presentation now, please?
So, hello everyone. So my name is Uzoma Okoro. I work at InfoCredit. Unfortunately, our MD is unavoidably absent, but I hope in the course of the presentation he'll be able to join in. So we'll be presenting on mobilizing local currency funding to support cold storage projects through innovative financing mechanisms. No, I thought you go ahead, join. All right, so the outline, we'll be looking at InfoCredit, an overview of InfoCredit, and then I'll be taking you through the climate finance lending facility, and then we'll be looking at the eligibility requirements, what we consider when reviewing cold storage project for potential financing, and we've also included an illustrative term sheet and our guarantee process.
Thank you, Uzo. Can you hear me?
Yes, we can hear you.
Excellent. So I'll just quickly walk through a few key points, and then Uzo would also join in the discussion. So just a bit of a background about us. So InfoCredit, we're specialized local currency institutions set up to provide guarantees to mobilize domestic resources in Nigeria to support infrastructure development. We're backed by the Sovereign Wealth Fund in Nigeria, alongside international DFIs such as Garanco, KFW, AFC, AFDB, and Info for Africa. We have to date helped mobilize up to $300 million Naira equivalent of financing using our credit enhancement tools to attract local pensions and insurance to invest in infrastructure. So as we all know, local currency is a very critical issue when we think about financing, especially because when we look at the income of the end users, it's typically in the currency in the country in which they live and earning. And so when we think of sustainability in financing these type of projects, which ultimately are infrastructure, we need to look at solutions that can mobilize domestic resources. The next slide. So what we've done to address this challenge, and I know the earlier presentations highlighted the fact of ensuring that we can blend funding. How do we look at innovative solutions that can blend concessional funding with commercial funding and reduce the cost of capital, address the issue of perception of risk, and then ultimately provide that longer dated funding in local currency that can enable these asset classes to scale. So, as much as we look at the business models, which are very critical, we need to look at funding models that can help in aggregation, but also in mobilizing domestic resources alongside concessional resources in a very effective way. And this is what the FCDO collaboration with InfoCredit by providing this £10 million funding that is enabling InfoCredit to blend finance and mobilize domestic resources to support distributed infrastructure projects, so both distributed renewable energy projects, but also distributed solutions, equipment that are also taking energy access from clean and carbon, low carbon energy sources. The next slide. So this slide just highlights the funding structure. Essentially, this reflects the way in which the two sources of monies come together. And InfraCredit, being a local institution, our job is to originate projects, structure, provide credit assessment, and present projects for funding, and ultimately provide the credit enhancement that enables counterpart funding to come in the form of senior debt commercial financing from domestic institutional investors, essentially attracting the insurance companies and pension funds to invest in instruments that create a new asset class for them, but at the same time allow their funding to go as domestic credit to real assets such as cooling equipment or agro equipment or distributed renewable energy assets, as it were. Next slide, please. So in terms of track record, one of the questions is really around what kind of criteria do we look out for? So typically, I'd say that cooling as a service, essentially cooling equipment, fall into a category of infrastructure that is distributed modular infrastructure, typically individually small, retail in terms of the consumer base, but in aggregate has the potential to be really scalable. And so like every type of retail sort of asset, you're looking at track record. We look at the actual developer or the operator's track record in managing such an asset, the ability to operate and maintain such an asset over time. The second is also we look at the historical cash flows and the performance, and this goes to the type of technology that is able to collect and present data in a way that shows historical losses or arrears in collections that also help us to predict over the future how stable the cash flows can be. Other typical financial ratios are taken into consideration. Typically, there is a need to have a debt to equity ratio. And for assets that typically may not have a proven track record, the lenders tend to demand a higher equity contribution and demand collateral. Now, the unique advantage of the blended facility that we co-developed allows for a second loss, sort of a first loss portion, which is a subordinated debt financing coming from that facility. What that does is that it reduces the requirement for high equity contribution upfront, because that form of capital bears a level of risk in the capital structure, enabling access to smaller scale operators that may not have built out sufficient equity that can support the scaling. So that allows us to support these sort of asset classes and aggregate them in a way that can achieve scaling. The next slide. So this is just a reflection of what a financing structure could look like. We have recently supported a distributed infrastructure where we're looking at financing that is closer to single digit because of the blending. So whilst commercial funding is somewhere around 18%, between 15 to 18% because of inflation, and this is very prevalent in many African countries where we have significant macro constraints. The ability to blend it with up to an equivalent amount of concessional funding that is also being provided as a returnable loan, but at a much lower interest rate, brings the weighted average cost to affordable levels, thereby reducing the cost of the service to the end user, because interest rate is also capital cost and also impacts on the ultimate service, cost of service to the end users. So this structure helps to reduce that. We provide a guarantee to attract the senior lenders, essentially get the insurance and the pension funds to co-lend into this project. And as a result of that, that reduces the cost because of the higher rated debt. This allows funding of up to 7 to even 10 years, potentially, but right now it's 7 because of the nature of the underlying asset and the life cycle of the underlying asset. Reducing the cost, but also the matching the tenor of the debt against the asset life of the equipment. The next one. Yeah, so typically the security is usually now like a limited recourse type of structure, because typically I'm sure most of these developers or the operators of the cooling equipment model struggle with high collateral requirement. But what this allows us to do is to really look at the asset in itself as collateral. And so the sort of project finance type limited recourse structure allows for a more structured approach to enhance more access to finance, as opposed to some of the challenges that borrowers tend to have with traditional commercial funding models that would ask for additional collateral beyond the actual underlying asset in itself. Next slide. So next one, I think there is one slide that has an illustrative schematic of the funding structure. Is that the next slide? No, not this one. There is a slide that actually reflects so we had a slide that shows the funding structure, which is very illustrative of how the blending works with the senior and the subordinated debt financing. This one shows sort of the process we go through, but I thought it would be useful if we could show the slide that actually shows the blending, where we have the blending facility that provides a subordinated tranche, and then the senior debt tranche coming from the senior debt provider, and ultimately you have a reduced cost of financing in the capital structure and in the program. So the last, one of the key points that was raised is around digital tools and PayGo. Now, one of the key things we'd like to see in data is, because of the need to aggregate performance data, we would like the digital information to be able to collect data on historical performance and arrears, but also the PayGo solution to de-risk collections of cash flows. I'd ask Uzol if you want to add a few things here, but also I just wanted to have the slide on the schematic. Please, could you clarify?
This is slide 5, the presentation. Yeah. So that's the slide, the empty slide. So you just, if you could click the side arrow. If you could go to the next slide, please, and then press the side arrow.
Just in the interest of time and maybe for the attendees, do you think this is something that you could add and we will upload? Because we'll make this, we'll make all the presentations available to the attendees and people interested in the topic. So that this could be added afterwards. Just we have another presentation, so.
Okay.
I think what is reflective here is just a model where we're able to aggregate smaller scale projects and then use a blending structure to reduce the cost of capital, but also attract institutional investors such as insurance companies and pension custodians to co-fund these pool of assets, essentially securitizing the cash flows. So the unique objective here is to mobilize domestic resources, to aggregate and to blend financing using concessional and commercial finance to unlock more scale. So I'll stop here. We're happy to take questions. Thank you.
Thank you, Chinua and Uzoma. And it was great to see the criteria and an illustrated term sheet. I'm going to, if it's okay with you, I'm going to skip asking you a question and save it for the Q&A, and I'm going to hand over to our final presentation. This is going to focus more on the solution side, how digital tools can be used to improve creditworthiness and showcase social environmental impacts of different solutions. Roberta, I'm going to hand over to you. She's going to present one of our own initiatives focused on cooling as a service, cold rooms, and digitalization. Thank you.
Thank you, Emma. Let me just share my screen. All right, so today I would like to present you briefly your virtual cold chain assistant project that we're running here at BASE in partnership with EMPA, another Swiss institution, and also to explain you how the fact that this project is really data heavy can benefit the end users of the project. So the aim of your virtual cold chain assistant project is really to support smallholder farmers in getting access to sustainable cooling solutions with the ultimate goal of reducing post-harvest losses and improving their livelihoods. How do we do this? The project is based on 3 key pillars, the first one being cooling as a service, the second one being digitalization. So we support the cooling companies we partner with to replace the manual operations at the cold rooms with a mobile application that we have developed, which is called Cultivate. And also we have a series of data science-based models and IoT solutions for the companies to be able to monitor remotely what is happening inside of the cold rooms. The third aspect is capacity building. So we are doing a lot of work and developing a lot of material on one side for the farmers to better understand what is the benefit of using cold storage, because we have seen that oftentimes this is a relatively new technologies in these communities. And so there is a lot of work that needs to be done to really motivate the farmers to use cold storage so that they can see firsthand what is the benefit that they can get. And the second aspect is more on the cold room operation side. So how can you optimize the operations at the cold rooms, especially in terms of managing rooms where multiple commodities can be stored simultaneously. The project started in 2021 with a focus in India with support from data.org and was later replicated in Nigeria and the Philippines with support from GIZ and the Climate Ledger Initiative. And what we do is we basically act as facilitators, which means that we do not invest in the cold rooms. We are not providing the cold rooms ourselves, but we partner with local cooling companies. And you see here the one we are currently partnering with to offer cold storage. And we support them in tailoring the cooling as a service business model. We support them in making the operations at the cold rooms more efficiently and also providing some of the training material that they can use to onboard farmers and cold room operators. To date, we're active in 19 cold rooms across India, Nigeria, and the Philippines, and we have the cold rooms have been used by more than 400 farmers, and more than 10,000 crates have been to date stored in and registered in the Cultivate app. So the Cultivate app is a mobile application. It can be used either on mobile or directly on desktop, on the web. That is entirely free to use, and it's meant to serve on one side the cooling companies, so enabling them A, to monitor what is happening at the cold room, and B, for the operators, so the person that are physically sitting at the cold rooms and managing the interactions with the farmers. It allows them to register everything that enters and leaves the cold room digitally. The cooling users on their side, they can use the application if they have a smartphone to monitor what is happening inside of the cold rooms, and also to get information about what are, for example, market prices or the remaining shelf life of the produce that they have in storage, so that they can take more informed decisions about when to sell the produce that they're storing. In case they do not have a smartphone, they get SMS notifications for important information to really make sure that we minimize the loss of the produce. So in terms of key benefits, one important aspect is the fact that the app can serve as a digital inventory management system, so really replacing manual registries, which as we have already discussed today, make also the understanding from an external perspective of what is the business viability of the solution very, very difficult. And at the same time, the app can also be used to monitor what is the temperature, thanks to temperature sensors that are linked with the application. Of course, the utilization and the financing linked to the room. And as I was saying, there are also data science-based models that predict the remaining shelf life of the produce in storage, and also what are the market prices around the cold rooms. So in terms of data, what is the data that is being collected as part of Cultivate? I think it's pretty clear that what I define as utilization data means everything that relates to the check-in and check-out operations. For example, what you see here in the first screen is the dashboard of the app, which shows you everything that is currently in storage in this unit. And so you will be able always to track how many crates, what are the most stored crops, who are the users, how much they're storing, and how much they're paying for what they store. There is also, of course, a lot of information that links to temperature and the shelf life data. I will not focus on this so much for the presentation today, but this is definitely something that could also be upcycled and used to learn better about the performance at these rooms. And another important set of data that we are collecting as part of the application are survey data. And so what we do is we ask cooling users when they first join the app and start using cold storage, what are the crops that they store the most, that they produce the most and they intend to store. And we ask them information about what are the quantities that they're losing. So what are the losses they're experiencing? What is the price that they're getting when they sell this produce? And we compare this information with information that we collect as the users continue using cold storages. And the idea here is that by comparing these two elements, we can get to metrics that allow us to define what is the impact of the solution. So how can we then upcycle this data? I think it's pretty clear that having information about utilization patterns and the data that is relative to the check-in and check-out operation, as we have also already discussed in other presentations today, can be really useful to then understand what is the impact of the solution, and also for the cooling companies to prove their creditworthiness and the fact that their business model is actually viable. An aspect that is also really, really important is that the fact that we have user-specific data allows us to do gender disaggregated analysis that can be really crucial to understand what are potentially challenges that female farmers are experiencing, so that when we think about capacity building, we can reflect on how can our material be better targeted to address these needs. And in terms of impact, there is, of course, the track of the cooling companies, so what I just discussed. However, there is also the aspect for the end users themselves, so for the smallholder farmers, because we have seen that they often struggle to get access to microcredit and even small loans because they don't have a track record of successful payments. And being able to show that they have consistently using cold storage and stored in these cold rooms with Cultivate is something that could help them in this regard. So with this in mind, we have started off recently implementing what we call an impact dashboard, which is basically a dashboard that is part of the Cultivate app for the cooling companies to better understand and monitor what is happening at their cold rooms. And this contains information about utilization patterns, about evolution of post-harvest loss and revenues based on the user survey, and also environmental impact. So here I'm showing you a little video of how this dashboard looks like. There are basically three main components. So we have been designing the company view as what we see as a place for a company to showcase the to external stakeholders what is the overall performance across all the rooms, whereas the aggregated views and the comparison view go more in detail. And the idea here is that, as you see now, you can select time period, you can select a set of units, and you can look in depth about the performance of all of this, also in terms of comparing potentially across regions, for example, or across time period. So this is something that we are currently testing. It's going to be released next week. And the idea here is really, as we thought about this as a tool for the cooling companies to leverage the data that we are anyway collecting as part of the Cultivate app. This is just the first step. Actually, there is more that we are planning to integrate here. One important aspect is that we are working to also include the environmental metrics, as I was saying, and this means for us two main things. On one side, there is the fact that we can estimate and calculate what are the greenhouse gases emissions that are avoided because we're using sustainable cooling technologies. And the second aspect is in terms of the crop spoilage that has been prevented by using cold storage. And for this, our partners, EMPA, is developing a life cycle assessment for different types of crops that are stored in the cold rooms, because we do know that depending on the commodities, the environmental footprint is very different. And so this is something that we can highlight when calculating these metrics. We are very excited also by the prospect of having the dashboard piloted on ground and also see what is the effect and the impact that the dashboard itself can have for the cooling companies in terms of really showcasing their performance to external stakeholders and understand whether this can maybe unlock some investment in financing that was difficult to get before. And in parallel, we are also starting now the development of a dashboard for the farmers, with the idea being of keeping sort of a similar structure to what you have just seen, but rather focused on making the farmers aware of the benefit that they have encountered by using cold storage and by using the mobile application, so that they can A, better profit from what they are using, and B, also help them access loans or microcredits. I also want to say as a closing note, in a way, that there is much more, right? We have just really started tapping into the potential of all the data that are collected as part of the Cultivate app. But as I was mentioning, one important aspect that we are thinking into diving deeper is also what can be done actually if you're able to better monitor what happens inside of the cold rooms in the sense of guaranteeing that the quality of the produce is relatively high because it has been stored in a cooled environment. My last slide is on challenges and lessons learned. I thought as we are one example of how digitalization can be used in this space, it's also important to be open in terms of what are the difficulties that we've encountered along the way. One thing that I would like to highlight is that we have been collecting a lot of data via the app, and it's great that we can upcycle that. But one thing that we need to be very careful about is how do we make sure that the data that we are using for this type of reports is actually high quality. And an important aspect that it's linked to that links to the survey data, because as you can imagine, it's relatively straightforward to ensure the high quality of the data that links to the check-in and check-out operations. However, when it goes to data that it's directly asked to the users, the story can be a bit more complicated. And one of the things we've really spent a lot of effort on is trying to make the survey questions more accessible for users so that they are able to actually answer. And these, to start from very basic understanding of what this means, is that if you ask about quantities, they might not be able to answer if you're asking them for kilograms, because maybe they reason and they measure in sacks or baskets. So we need to allow for this type of flexibility in the survey as well. And taking maybe a step back, not necessarily thinking about the impact dashboard, but really on a broader perspective on digitalization and data, an aspect that is very important that we have seen and we have worked a bit on is how can we unify different methodologies, because all these schooling companies that we're partnering with generally already have some sort of method to estimate the impact of a solution. And so what we needed to do to create the impact dashboard is actually to come up with a shared methodology and a shared understanding of what do we mean when we talk about, for example, food loss evolution or post-harvest reduction. Closing with a word of caution. Also, I think it's important that, of course, there is a lot we can do with this solution. There is a lot of insights that we can collect from this data. However, we also have to be mindful of the fact that not everything can be collected here. And we have been very careful in trying to understand what are questions that, reasonably speaking, our average user will not be able to answer. And so, for example, when we think about the environmental analysis that we're integrating, we would love to have information about the pre-harvest part of things, but we do know that for smallholder farmers and for maybe traders that might use cold storage would be very, very difficult to answer those questions. And so this is something we also have to compromise on a bit. Thank you, Emma. Back to you. Happy to get questions.
Thank you, Roberto. We look forward to the proper launch of the dashboard and seeing in all the different directions that you can develop the Cultivate app as well. Just a quick question directed to your presentation. You mentioned that the survey will collect data and that you're considering different incentives. What kind of incentives have you explored?
Yeah, we are not talking here about monetary incentives, but rather about, how do we remind them that this information is still needed because it's pending? That's one aspect. And the second aspect is how do we make sure that they understand what is the benefit of actually collecting this data? And this is clear that there is a benefit from our side as project implementers, right, in being able to have data that back up the impact and the performance of the project. However, the creation of the dashboard, it's something that also empowers both the cooling users and the cooling companies and the farmers to actually leverage their own data. And so we think that this is a really important incentive for them to also be motivated, to spend the 2 minutes that are needed to fill in the surveys, for example, when they register the first time.
Okay. So kind of nudging and yeah. I also have a question I didn't manage to answer to Chinua or Uzo. Basically, you showed some of the criteria there, which was very interesting to look at. But I wondered, in your experience, what do you see as the main blocker potentially when you've assessed cold room operators or or companies operating in this space? Okay. I'm not sure if you can hear me, but I will save that question just to let you know that we'll be collecting all of the questions that were asked in the chat. There's quite a lot of them, and we'll prepare a Q&A document to capture all the nuggets and the insights. But okay, maybe a question then directed to Matthias from AcoFresh. There was a question related to, I guess, seasonality and utilization. What are the challenges that you have faced in relation to utilization, and how are you tackling these?
Right. Thank you so much. So that was a very good question. To be very honest, we aren't able to utilize our cold room all year round. This is because of changing, farming seasons, because we are currently at the farm gate. And the interesting thing is that where we are operating is one of Ghana's major tomato farming communities. So majority of the farmers do produce tomatoes. So you can ask yourself what then happens when tomatoes out of season. So because of that, we are able to have utilization between 7 and 8 months in a year. But what we are trying to do to mitigate this is introduce new crops, because most of the other crops in there are minor, so most of the farmers don't really utilize the cold chain for it, because they are easily able to sell it off right after harvest. So that is one key thing we are trying to address by getting farmers to now produce crops all year round by providing them with some form of resources, like having them get access to water and other inputs to help them produce their tomatoes all year round. So in that case, on our end, we are able to also get a full utilization within the 12-month period in a year. But as of now, we are only utilizing it for about 8 months due to the change in farming seasons for some of the farmers.
Great, thank you, Matthias. We probably have time for one more question before I just introduce the next session that we have coming up next week, where we'll have more opportunity to deep dive into the questions that everyone is asking. It's for you, Roberta, regarding the Cultivate app. Has any organization leveraged the app so far to basically to get financing? Can you share insights from the farmers or users of the app? And are you able to share these? Sorry.
Yes, I can say that, first of all, the impact dashboard is not live yet. It's going to be released next week. So that's why I was saying that we're very excited by the fact that it's going to be then available for them. What we do know is that the cooling companies that have been using the Cultivate Hub have been very interested in exporting their own data. For the sake of then being able to showcase what has been registered there to external stakeholders. So this is something that we have already started doing, but that we wanted to streamline and also make it integrated into the Cultivate app. I have to say also that it's relatively difficult to disentangle what is the benefit of starting with cold storage as opposed to starting with cold storage and the Cultivate app. However, we do have a few companies that have, so a few companies have started this in parallel. And so in that case, it's quite difficult, right? So they opened a cold room business. They have the first cold rooms or the first 2 cold rooms. And on top of that, they're also using the Cultivate app. However, we also do have data from companies that were already on the ground and that they're piloting, cultivating some of the cold rooms. And so that type of data is then really, really important also for us to understand what is the added value of the Cultivate app on cold room operations.
Great. So it's more about the potential there and the data and basically beginning the process of data collection and thinking about how to use it. Great. I see that we are out of time. I would like to thank all of the panelists today and speakers for being here and for really interesting presentations on understanding some of the challenges, some of the solutions, and also a lot of different, I guess, tools that were illustrated that can really help on this journey to scaling finance. I would like to invite everyone here today to the session, the third and final session that we have next week. This is more of an interactive session where we really want to create meaningful dialogue between the panelists who represent different sectors and also the cooling companies. So we really invite you to come and participate and to ask more questions. We'll have more time for these. You can register there via the link, or we also have this available on our website. And thank you so much to everyone for participating. And I hope you all have a great morning, afternoon, or evening, wherever you're joining us from. So thanks again.